What's going on, guys? Moyed here. Welcome back to another video. In today's lesson today, guys, I'm going to be showing you how to avoid market manipulation. Okay, so today I'm going to be teaching you how to avoid certain types of manipulation that occur in the market, and I'm going to be showing you the 3 steps to take. Okay, before we get started, really quickly, guys, I want to let you know that if you head right into the description, the first link down below is our link to our free Discord server. If you click that, you get access to our free Discord server. We share all our not all of it, some of our analysis there for free. There's a chat, so make sure to join us. And yeah, looking forward to seeing you guys on the team. Now, to get started, don't want to waste you guys' time today. So I'm gonna pull up. I'm just gonna pull up Bitcoin here. It doesn't really matter when we're discussing manipulation. It happens on every single security. Okay, so it happens on currencies, commodities, metals, whatever it is. Any market where the institutions and the banks and the central banks are participants in the market. Okay, manipulation is going to occur. So the first step today I'm going to teach you guys is you have to understand where you are in the market, so what phase you're in, and this can be understood by something called CMT. Okay, now this is something that I never have shared on YouTube before. This is something that I actually keep only for my premium group and my premium course, but today I'm going to share a little bit about it. Not going to go too much into detail. But basically what CMT is, it stands for consolidation, manipulation, and the trend. So consolidation, as you guys know it, it's normal up, down, price just trading in a box. Then we have something called a manipulation, okay, and we have something called a trend. So this sort of pattern you see in the market constantly, and understanding where you are in this, okay, this can be like a very, very simplified Wyckoff right here, okay. Understanding where you are in the market can really help you avoid the manipulation. The area of manipulation is obviously this one right here. We want to avoid this one. Let's just understand first of all the functionality behind what this is doing right here. So obviously, as you guys know, with consolidation, you're getting liquidity being built up on the top and being built up on the bottom. Okay, so stop losses are accumulating at the top and the bottom. Okay, so what happens with this manipulation a lot of time, it's very volatile push down. Okay, which sometimes can be considered just a spring. Very volatile push down below the lows to clear these stop losses. Lots of money pools are sitting below these lows. Okay, so that push down clears these stop losses, and then the trend will end up clearing the stop losses on the top. So in here, what we're doing is we're clearing liquidity on the bottom and the top, but we're taking the closest liquidity first. Okay, so the first area of liquidity, so the first side of the consolidation that gets cleared first is going to be the fake out, and then the other side is going to be the trend. So let's take a look at an example here. Okay, so if I go, for example, on my 45-minute time frame, what can I see right here? I see that I have a consolidation. I see that I have very strong price action push down, clears the lows first, and then trends up, clears the highs. Okay, this can be seen on every single time frame constantly. Okay, let's go down to like 15-minute time frame, and I have a good example right here. So you have consolidation, see these highs building up liquidity on the top, lows building up liquidity on the bottom. The first fake out, okay, so the first breakout is going to be our fake move. Boom. This tricks a few different people in the market. So first of all, it will trick people that have their buy stops right here trying to trade the breakout. Second of all, it will trick the people that are doing a breakout and retest. So they wait for the breakout, they don't enter. These are a bit smarter traders, and then they're waiting for that retest back down to this level, and then they're looking to buy. And then there's people that are looking to sell this resistance. So these are the 3 type of traders. All of them, their trades would have failed in this scenario right here. Okay, so as you can see, manipulation, and then it trends down, eventually clearing the lows on the bottom. So liquidity gets cleared on both sides, and that's what we're doing. We're playing ping pong to try and clear liquidity on each side. Okay, so that is our first step. So what we are trying to do to avoid manipulation with this understanding is we do not try and enter in the consolidation, okay, because the manipulation can occur each side, so it's pretty much a 50-50, okay. It can be a bit lower if you understand market structure, of course, but if you're just looking at it from this perspective, it's a 50-50 chance that they're going to break up to the top or to the bottom, okay, because there's liquidity on each side. The only other determining factor would be the market structure. And then you will have your manipulation, which we won't look to enter yet. Once we get the confirmation of the manipulation and we see the turning point up at the manipulation, now I can start to try and form my trade, okay, somewhere up here from a scenario number 1 setup, or I will wait for a break of structure, okay, and then I will look to enter on a retest, and then I will look to try it down. So right here, what I would have been doing is simply avoiding my manipulation, okay, and just avoid this consolidation, because if you're buying or selling, it's just going to be in a box. You're not going to really go anywhere. And with this sort of concept, you need volatility behind you, okay, to push your trade to where you want it to go. So here I would just simply avoid my manipulation and consolidation phase. I'll wait for the trend. Okay, the next thing that you can look at is, let's say for example your price is starting to near a major low or a major high, or swing high or swing low. So for example, we have this price action right here. So obviously we had a few lows, okay, and each time lows got broken, and eventually we had our last low right here. So 3 drives to the bottom and we push up. Now as my price is reaching down, we're starting to reach a major low right here. Okay, so this is a major low in the market, swing low, okay, has a low higher and higher on both sides, okay. So it's starting to reach this area right here. So if I drag my box, this is going to be major low. So when we're starting to reach this area, there can be multiple things that potentially could happen. So we could potentially get a touch right off this, create a double bottom and push up. We can get price to break through it, clear liquidity below the low and push up. Or we can just get a straight breakthrough and a push down. With this type of not knowing what the market could do at this area, there's just too many scenarios that potentially could play out. What I would do is to just stay out, okay, especially if I'm near a low or a high. I will stay out. I will wait for that low or high to be run, okay, and then when I get a confirmation of a bullish engulfing, bearish engulfing candle and a break of structure, this is when I will look to form my setup. So for example, I'm reaching here. Do I look to take a buy, setup, anything like this? No, because I don't know if it's going to react from here, going to break that low or not. So I will wait. Once my liquidity gets cleared, okay, and you guys are going to notice in the market, each time liquidity gets cleared, you get some sort of reversal. Whether it is small one, whether it's a small pullback, whether it's a complete total reversal, each time liquidity gets cleared, you get pullback. Each time liquidity gets cleared, you get a push in the other direction. Okay, this happens all the time. See, liquidity cleared, push in the other direction. Liquidity gets cleared, push in the other direction. So this potential scenario here, we wouldn't know unless we see what happens. So once my low got cleared right here, okay, and we got that big push up, I will wait for my break structure to occur. Once we have my break of structure right here, boom, now I can look to form a setup. For example, I could have formed a 15-minute IC buy right here. So to recap, I will wait to see what I do. Once I approach this higher low, I will wait for a price to do its thing. I'll either wait for it to break, react, but I need some sort of confirmation here. Okay, so I won't make a decision here because there's too many different scenarios and you could easily get manipulated by being near a low. So the main point is here, do not try and get into a trade near an area of liquidity. Wait for all the liquidity to get swooped and then get in. This applies the same for a support and resistance. If you have, let's say for example, an institutional candle right next to a resistance. Okay, let's say this is a strong resistance right here. Okay, see strong resistance. We have an institutional candle. Will I look to get into this candle? No, I'll try and avoid it because I know there's so much liquidity up above. There's a high chance that we could get up, break of structure on that first, break of liquidity, clear that money pool, and then push down. So if I'm close to liquidity, such as lows, support resistance, a trend line, whatever it is, I will look to avoid my institutional candle. Okay. Lastly, in connection with this, what I can do is then my last step would be to use my order flow software to spot seller and buyer traps. Okay. So in this example, what I can do is pull up my order flow chart right here. I think I might have to restart to give me a second, guys. All right, so I pulled up, I refreshed my chart there, so order flow is working perfectly fine. Okay, so as I was saying, the last confirmation, then what I can do is wait for price to basically create a seller's or buyer's trap for me before looking to enter a trade. Okay, so in this example, we have multiple lows. Okay, so we're on GBUSD 6B future. So multiple lows, and a low right here. So what I can do to try, before I try enter this buy, even before I clear these lows, what I'll wait for is a seller's trap. So see these selling imbalance right here, this is a seller's trap. So this is basically telling me that at the bottom of this wick, a lot of sellers got caught. Okay. and then this candle turned into a bullish candle. Now, obviously, sometimes this setup might not work. In this specific example, this was a double whipsaw action manipulation, and this is very, very hard to, like, even the best of us will just get caught with this, where manipulation will occur downside first, occur to the upside, and then go to the downside. So not just one manipulation and then up, it will be 1, 2, and then down. So 2 manipulation, and this is something that you can't just avoid sometimes, unless it kind of boils down to luck at the end of the day with this one. Okay, so then you have a seller's trap right here, and what I will do is I will not get into this trade until I see this seller's trap. Once I get this confirmation, I can look to buy, either using this as a support. Okay, so seller imbalances usually become support when you have a stacked imbalance like this, or you can wait for an institutional candle in this area. Okay, so if I bring this to the chart and compare it, if I go into GBPUSD, I'm not going to show the exact same example as that because it'll take me a while to find it, I think. But I have an example right here. So what I will do, so for example, on the 1 minute time frame, before I was looking to buy anything, what I will do is I'll wait for a consolidation, liquidity to build up, and before the reversal, for me to avoid the manipulation, I will not look to enter my trade on this consolidation. Let's say I have a point of interest to the side right here, and this is my point of interest. Let me make it even simpler. Let's say I have an institutional candle right here. I won't look to enter my institutional candle, okay, if I'm consolidating right here, until I get manipulation first and I see a seller's trap down on the order flow, and then I can look to get in a trade once we break structure. Boom, retest, and then I can look to buy GBPUSD in this setup right here. Okay, so this would have been like an accumulation on the smaller time frame, but you can simplify it, as I said, once again with CMT, understanding order flow, okay, finding that seller trap. And what you're doing here is to avoid manipulation. At the end of the day, you're just waiting for more and more confirmations. You're waiting for the manipulation to occur. Once you're able to see the manipulation occur, you can feel free to enter then, but don't enter before the manipulation, in case it manipulates you first, okay, or price goes in your direction, okay, for a small bit, and then goes back down and the trend hits your stop loss. So you don't want to get the manipulation or the trend to hit your stop loss, so you just wait for the manipulation to occur. Okay, so to recap, guys, 3 things you want to look out for: CMT, okay, looking at the market phases. Then you want to find if you're close to a high or low, make sure that liquidity gets cleared out first. Then you can use your order flow to look at your buyers and seller traps and determine where you're going to be going next for manipulation based off of the contracts. Okay, so that is pretty much it, guys. As I said, with CMT, there is a bit more advanced version where you consider timing with it, and there's a killer setup that we teach our premium students. So if you guys are interested in learning more about that, make sure to head on to fuacademy.io and sign up there. We also have a deal, guys, where if you sign up to our broker and deposit minimum $500, you get free access to our lifetime package, and you also get a free 1-hour call with any of your chosen mentors. So with that being said, I hope everyone gained value from this video, and I'll catch you guys on the next one. Have a good day. Bye bye.